Hello, 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 good people. How are you guys doing? Happy Monday. My name is Jeremiah Davis, and I am the funding coach. And today is Monday Fun Day, where I provide funding tips. Uh, I own businessfundingnow.com, loan brokerage company, and I broker all types of funding products, everything from personal loans, business loans, equipment financing, investment in real estate, MCA loans, SBA loans, PPP loans, and EIDL loans. There's so many different funding products on the market. Um, there's there's a way to get what you want through the funding. You just have to know where to get it and what you need to get it. The qualifications and requirements for any particular funding product. And so today's topic is why the bank said no. Um, I get this a lot, a lot, a lot, a lot. People don't really comprehend or understand why banks tell them no. Um, and it's a variety of reasons, and I want to cover a few of them today. But main reason is most likely you are applying for a funding product that you might not qualify for, or you don't know what this particular bank or financial institution is looking for that particular loan product. So it's very important to do your research on not only the type of funding you're looking for, but what's the type of funding right for you. Because all funding isn't created equal. All financial institutions are not created equal. All banks are not created equal. Okay, let me give you a good example. Um, Software. Okay, this is something I'm working on, developing my own software for my company to do loan processing. Well, most of these banks and lending institutions use the same software or similar software to do the AI analytics, pre-approvals, and things like that, right? What these softwares don't have is the money on the back end. So when you buy the software, you don't get the funders with it. Okay, so that's one thing. But when you buy a software like that to run your financial business, you get to um, customize the underwriting process to your needs. And a perfect example is your standard bank loan from your traditional bank or credit union versus a payday loan. Okay. They collect the same data, right? One gives you approval with high interest rates, the other one might approve you for less or deny you altogether. Okay. And I know how that can be confusing on the other end of things. But it's important you go to a payday loan or a high interest loan provider, they give you $5,000 or $10,000, that you're going to pay, anywhere from 30, 40% to 200 or 300% of interest, right? With those payday lenders, right? You get $500, you end up paying back $2,500 over the next couple of years, but for what I do, I don't usually deal with a lot of payday loan unless I have to. I have an MCA loan, merchant cash advance, basically a high interest payday loan for business owners. Okay. When you don't have good credit, but you need cash fast, that's what I go to. When, or just some scenario where you can't get money in a traditional manner. Now, I try to educate my people. If we go this route, it's going to be for a short period of time because I don't want you to be paying on that high interest for the next 9 to 10, 12 months. I want you to get in and out of it. All right, solve the issue at hand, but come up with a plan to get out of it in 3, 4 months, and that usually is credit repair. Okay, but so you can go to, say, Navy Federal Credit Union, right? They have a pretty liberal loan process, right? It's not hard to get approved for a loan or a credit card through them if your credit meets their criteria, or if you already have an established account with them, a relationship with them. They're pretty liberal, right? Some other banks, say MasterCard, or American Express, they have different criteria. They want a higher threshold to approve you for this unsecured credit card. Okay. Why one bank might say, okay, we can't approve you for 25,000, but we can approve you for 5,000 at 13%, rate at a signature loan at your local bank. Okay, that's not crazy, but it's probably because your credit is below 660, and you might have a couple of lates or a couple of dings on it. And years ago, I got some couple of loans like that to do some debt, some pay off some credit cards and things like that. Or when you go for an auto loan or a home loan, all these lending institutions set their own criteria, and then they approve or decline application based on their preset criteria. Usually the lending officer nor the person you're talking to that makes those decisions. Those decisions are made, by the bank president, the board of directors, what have you, that what type of client they want to service. Okay. So that's why you have people that go to these nice banks and get nice loans. Other people go to other banks that don't get so much nice loans, but they need it, like the predatory lending. They only, lend to the poor and people with bad credit. A person with good credit is not going there to get one of those high interest loans or title loans or anything like that. Okay, so knowing your research, and now let me get a couple more criterias, right? Because what I do is, you come to me for funding. I'm going to ask you a series of questions to see which funding product you qualify for. Say you come to me for a business loan. The first question I'm asking you, how long you've been in business? If you say anything less than 2 years, then I know the standard business loan application is not for you, because the standard for a traditional business loan is 2 years in business, making $100,000 a year, and having 2 years of financial records, tax returns, P&Ls, balance sheets, etc., and good personal credit. So those are like 5 questions I asked. Have you been in business more than 2 years? Yes? Okay. Did your business make more than $100,000 a year in the last 2 years? Yes? Okay. Do you have your last 2 year tax returns? Yes? Okay. What is your personal credit? Is it above 660? No? Oh. Redirect. Go to another funding product like the MCA or the personal loan route. Okay. Same situation. If you are trying to get into the fix and flip industry and you come to me for a hard money loan where I can get you up to 90% of the purchase price and 100% of the rehab costs on that said loan, I'm going to ask you a series of questions. Okay, do you have a property in mind? Yes. Okay, do you have it under contract? No. Well, the first thing you need to do is go get it under contract so nobody can buy it from under you. Okay. Do you have 10 to 20% of the purchase price as a down payment? Yes. Great. Because then now we're halfway through the ball game. If you got it under contract, you got your 10 to 20%, then I can go ahead and, because credit is not that major of a factor with hard money, because the property is the collateral. So you can have a 580 credit score and still be flipping houses. Okay. You just got to have some cash, some skin in the game. Okay. So it's things like that, knowing what type of funding you're looking for. Okay. Say that same scenario, you want to get into the fix and flip. You don't have the 10 to 20% down. You don't have $2,000 to put it under contract. Then I'm going to go back to the personal loan angle and see if you qualify for a personal loan and get you $25,000, $50,000. And then I'm going to tell you to go get the property under contract. Okay. Put the money in the bank. Don't spend it. Just get it under contract, $2,000. Okay. Then you're going to have to go get you a third-party rehab budget. Okay. Of that said property. You're going to have to get the comps in that community, that area, that 2-3 block on that block or 2 or 3 block radius, so we can have something to compare it to. Okay. What is your after rehab estimated value of that said property? These are all the questions that the hard money bank wants to know before they approve you for a loan. Okay. So I give you the formula so you know how to get into the game. Okay. And if you don't have what's necessary to get in the game, which is money, then I'm going to try to get you into a personal loan, get you about $50,000, and then give you the step-by-step play to go find a property that meets the bank's criteria, right? It has to be, you got to have the main criteria is it's not a nickel and dime deal, meaning you can't buy property for $25,000 and then it be fix it up and it's worth $50,000. Ain't nobody making no money on it, especially the bank. So they're not interested. They want at least $75,000 to $100,000 or more in ARV after rehab value of that property for them to put up to 90% of the purchase price, not 100% of rehab. They want to know exactly what the rehab is going to cost. Okay, so let me give you an example of that. If you find a property that you want, right, and it's a good time to get into the game. I mean, I don't know when it's not a good time, but it's a buyer's and a seller's market right now. So it's kind of crazy. Most of the metropolitan cities across the country are blowing up. House prices are going sky high all over the place. Anyway, what you say, give you a scenario, $100,000 property as is, right? And it needs, say it's $25,000 rehab, all right? Just to keep the numbers simple. After the rehab, right? So you're into a total of $125,000. The property needs to be worth $200,000, right? That's a $75,000 minimum ARV after rehab value, all right, or more. Okay, $100,000 would be, $225,000. Anything above that is all gravy because that's more profit in your pocket that you can get for that property, or you can hold it and basically refinance it under standard mortgage, rent it out, and now you got a asset with equity, with the $100,000 equity in it. So if you need to get that money, you can do some other things with it. But that's kind of the things that you need to know. All right, when you're going to apply for a particular funding product, you need to know exactly what the criteria and the qualifications for that particular funding product are. Do you meet the requirements, or do you have to find another direction to accomplish your goal? Okay, this is the stuff that you need to know. Instead of running your credit 15 times to different lenders trying to get this money. Okay, a couple of rules. Nobody's funding your whole deal 100%. Okay, this ain't personal. This is business. Ain't nobody gonna be like, well, I got this property, it's a great deal, but you ain't got no skin in the game. Okay, well, let's just think about this rationally. Would you loan if somebody came to you off the street and be like, hey, can I get $200,000? I got a property and I want to buy it and I'm gonna rehab it and it's gonna be worth $300,000 afterwards? Put it like this: I'm not giving you my money. Okay. Well, the banks aren't either. Okay, it's that simple. Okay, when you're walking into a bank and you ask them for money, they want to know not only are you credit worthy, but you got steady income that you can afford what you're asking for, and that you have some skin in the game, you got some collateral, some money down your own, so you got something to risk to lose as well, and that you can pay it back. Okay. All right. I mean, so I'm sure all of us have had a friend or family member say, let me get 20, let me get 50, let me get 100 till payday. Yeah. And you know which ones pay you back and which ones don't. All right. Well, the banks ain't no different. The bank game hasn't changed one bit. They still want to know what you're working with and how you're going to pay it back. And in this day and age, if you know this information, you can access all types of money anytime you need it. You just got to have your credit in order. You got to have your documents in order. And you got to know what you're going to do. Know what you're going to do. Okay. Let me take food truck. All right. You want to open a food truck? I got you. Equipment financing. No problem. All right. What do you need? You need the first and last month's payments as a down payment of that equipment. Say the equipment costs $100,000. Just an example. All right. The payments on that for 5 years would be about $2,500 a month. So you need a minimum of $5,000 down payment on a $100,000 piece of equipment. Okay. But you also need some additional monies to cover those other costs, insurance, tags, things like that, special licenses, whatever you need, special permits that you might need to operate your food truck. Maybe it's a big one and you need a CDL or something like that, or maybe it's your over the road trucker or a dump truck business. Those used ones go for $100,000. All right. So you need to know what you're working with, what you're going to do, because as soon as you get it, the money and the equipment, you're going to have to start making payments within 30 days. Okay. So you need to be ready for that. You can't be like, okay, I'm building. So I try to structure you. If you need the gym equipment, restaurant equipment, food truck equipment, a dump truck, tractor trailer, that you have a plan to get the equipment and get it generating revenue for you as soon as possible. Okay. And the quickest, easiest way to get some money to start your business or grow your business is personal loans. Now, I know that goes contrary to what a lot of people teach, building business credit. Okay. Yes, you do need to build business credit. I provide that service as well. Okay. I optimize credit for funding. I do loan as a loan broker, and I do business credit as well, and coaching and consulting. A number of other things in there as well, like merchant accounts and anything pretty much moving money. I got something to do with. But you, if you're going to get a personal loan, right? Well, let me back it up. For business credit, right? Business credit is not a synonym for business funding. There are two separate products. All right, business funding is business funding. Business credit is business credit. There are certain loan products out there that you need both to access. Okay, it's called the SBSS score, which the SBA and a lot of financial institutions use when they're loaning money to businesses, right? They want, and that score is a combination of your personal credit and your business credit, and they have a scoring model that they join those two together and judge you on your credit worthiness based on those two. Now, so like SBA loans, a lot of them, traditional loans, not this PPP and EIDL stuff, but all the other traditional loans that you would go to a bank for to get SBA loan, SBA loan 7A or one of the others. There's a ton of different SBA loans out there, but they're looking at that score. So you don't have the score, you're denied. End of story. Okay. But how do you get the score? You got to maintain good personal credit. You got to build your business credit. As simple as that. Okay. Now, on the flip side, can you get money access without business credit? Yes. If you do apply for some type of business funding without business credit, well, or with business credit, to tell you the truth, you're going to have to personally guarantee it. Okay. And if it's a large sum of money, you're going to have to use some type of collateral as well. Okay. Meaning your house or something like that, or a 401k or retirement fund or something that is a value to the bank. Okay. And they have certain criteria, how much they're going to use of that particular piece of collateral, meaning you're not going to get 100% value for your collateral. Okay, they're going to do anywhere between 50 to 60, 70, up to 80% loan to value of your collateral. All right, and the way they assess that is by how fast they can turn your collateral and resell it and make it their money, get their money back. Okay, if it's a piece of land, raw land, they might give you 50% because it's going to be harder for them. And it's going to take them a longer period of time to get rid of it, to sell it to someone else. Okay, things like that. Now, if it's a piece of heavy equipment, they might give you 80% on that because they know they can flip that quicker. Okay, so it's little things like that that are not in any book, that you can buy and get those tidbits of information. Okay, So what I will do is take it for someone, and if they didn't have they meet the credit criteria, they got good credit above 660 with no derogatories on lates and collections and all that, tax liens, child support, any negative items, can't have no negative items on there. And they make the income requirement. I will get them anywhere between $50,000 to $100,000 in about 2 or 3 different loans, maybe 4, right? So they're all signature loans with low interest rates in the low teens or sometimes even below 10%, that are monthly payments over 5 years. And then I will help you structure your payments for the first year, right? And then strategically use the other money to get into the real estate, to get your food truck, to get your dump truck, to get your tractor trailer, to get your gym open. $100,000 with a plan can become $500,000 in a minute. So those are the type of things you need to be thinking like, okay, outside the box, so to speak. What do I have? What do I have? What am I working with? And how is this going to get me to my destination, right? And your destination is be starting your business or growing your business or getting into creating another stream of revenue, like the real estate game. You maybe want to, get a few properties to rent out. That you should do that. We all heard it. All millionaires own real estate. So there you go. Okay. So my point to all this is, why the bank said no, depending on where you went, what their criteria was, what you came to the table working with, and what your credit was, what your collateral was, were you worth the risk? Okay, that's your first impression and your last impression. Okay, you only get one shot. Okay, so before you go, just taking some tidbits of information off the internet from somebody, and then going and getting denied repeatedly, is going to be more harmful to you and your business than taking a few extra precautions, talking to somebody who knows what they're talking about, so they can give you some guidance through this financial industry and find the right loan product for you, right? Because at the end of the day, all businesses, the fundamentals are the same, right? You got a product or service, got a price point, right? And why would someone buy that from you over the next guy or lady? So it's not complicated. It's not hard to understand. It's just the information has been compartmentalized, and we didn't have access to it. Okay, now we have access to it. We need to take this information and start building wealth, start building generational wealth, and being more financially responsible. Okay, got to pay your bills on time. Don't overspend. Don't go for the instant gratification. You want it now. No, you can have it, but wait for a minute. You don't need no Gucci. You don't need no designer clothes and bags and sunglasses and cars, and ain't nothing wrong with that. Don't get me wrong. But if you're on a mission to change your life, to change the lives of your family, to change lives in your community, do it right. Because if you don't, I always say this, you reap what you sow. If you're not sowing good stuff, investing in people, truth, honesty, ethics, morals, values, then you're not going to reap those things. It's not a difficult concept. If you're out there trying to hustle and steal, scam, and that's what you're going to reap. You're going to get all that back and then some. So I'm just a proponent for doing things the right way the first time. And if you don't know the right way, ask somebody. Okay. And yeah, my point is, once you know the information, it's easier to navigate this situation, and you can accomplish your goals, but you need the right information. You need the correct information, and use some common sense. It kills me when I get people to call me and say, I got business credit. Can I get a business loan? And like I started off with, okay, how long you been in business? I just started. How much money is your business making? I ain't made no money yet. Who's gonna give you any money? Why would it? Why would I even? You know, that's just not. That's not logical. That's not. That's not how the world works. Just because you build, yeah, I'm glad you have a few credit cards that give you access to this lines of credit or services. You might be able to go lease a car, buy a car in your business name with 8 or more, business credit trade lines, which is all great. But you want cash? You want somebody to write you a $200,000 check or the direct deposit to your account? You better come with a table more than that. Or you're gonna look silly. You're gonna embarrass yourself. All right, because ain't nobody giving you no money until you can show them unequivocally that you can afford it and pay it back. If you cannot show that, the only thing they're gonna look at is your bank account, your paperwork, and your credit. So stop living in these pipe dreams that you can build business credit in 6 weeks or 30 days and have access to all this. That's not true business credit. What that is you got the credit criteria, you can get business credit cards that are PG'd, personally guaranteed. So it ends up being personal credit just in your business name. Now, some of those cards do not report to your personal credit unless you default. But then some of them might not even report to your business credit either. So basically, you just got a regular credit card with your business name on it and most likely your name on it too, or one of the two. All right. That's a big difference from real business credit. Real business credit comes when you don't do no PG. Okay. And it doesn't happen overnight. There's no shortcut. There's no access. Yeah, there are different little things we can add to, I have access to our primary business trade lines that I can add to, but I'm very cautious because they're very expensive, right? And they will add, but your business has to line up with the card, meaning the card was 3 to 5 years old, your business need to be 3 to 5 years old. Okay, you can't just have a startup and then all of a sudden get this business card that's reporting to your business credit, and it was established 3 years ago. Well, this don't make no sense. Okay, so that's what I'm saying. When you're out there, make sure you're asking the right questions. You're looking to build your business credit. Somebody's promised you they can do it in 30 days or 90 days or what have you. Ask them, is this contingent on my credit? Is this going to report to my credit? This is true business credit. It's not business credit with a PG. I mean, there's a ton of questions you should ask. Okay, that's what I'm saying. There's no magic. There's no loopholes. Ain't nobody out there smarter than nobody else, especially these banks. Banks have been around for a long time, and they ain't losing no money. Y'all can't outsmart the banks. Okay, you can't. They have fraud detection software. When you submit your bank statements that you manipulated, I can't catch it. I mean, I've had them half a dozen times. I sent them on to the bank. Bank sent me an email talking about these bank statements are fake. I'm like, what? Making me look crazy. Now I'm gonna come back and talk to you crazy. Why are you giving me these fake bank statements? Huh? You don't think they got the algorithms and the computer software to verify transaction balances with your bank account? You give them authorization when you sign the application. I'm just saying, don't fall for the okie doke. Okay? Don't fall for the okie doke. Okay? I've had people come to me and went to somebody, they were supposed to get them a bunch of funding. All they got is a bunch of credit cards and a bunch of inquiries on their credit, and they still need money. I can't even help them. They got too many inquiries and too many new lines of credit that their DTI's out of whack, and their credit score dropped 40 points. Okay? And then they come to me like, well, I pay these guys. Okay. I'm not an advocate or proponent for paying anything for like upfront before delivery. Okay. You come to me, I charge my fees on the back end after I do the job. Okay. Not all of them, but most of them. But Yeah, for like, you want me to build your business credit? I need my money up front, but it's gonna get done. It's gonna get done the right way. Okay, things like that. You want what else? My credit optimization program. Yeah, you got to pay the audit fee. Yeah, I got work to do. I got people to pay. I got things going on. Okay, so my point is, if it's too good to be true, it is. None of this is new. Okay, but think it through. You think a bank or a financial institution is going to say, "Here, would you like $200,000?" No, I don't need your ID. I don't need a bank statement. I don't need no docs. No docs. It's not. It's not a real thing. Okay, I admit there is some less docs options. Okay, you can apply for some types of funding products with minimal documentation. Okay, but there's too much fraud in the world for nobody just to say here. And then if you do say you do stated income with minimal docs, they're not going to give you a large sum of money. You're going to get a fraction of what you would get if you provided full docs. Straight up, I have stated income funding products, personal loan, business loans, or personal loans, not business loans. But you know what? The first minimum criteria is a 700 credit score on all three credit bureaus to even be considered for stated income. They figure if you got a 700 credit score, you say I make $100,000 a year without providing tax returns. You still have to provide ID checks, bank statements, things like that. You just don't have to provide a whole litany of financial documentation like tax returns, P&L, balance sheets, things like that. But you still have to show some minimal documentation. But instead of getting $100,000, you're going to get $25,000 just because you got a 700 credit. That's all they're willing to risk on you. Okay, I've seen it 100 times. So I'm just saying, why the bank said no is probably because you didn't have all your ducks in a row. You don't know what the bank criteria was for the particular loan product you were applying for. You need to check the bank, ask the questions before you apply. What are the minimum requirements to apply for your Signature loan? What are the minimum requirements to apply for a business loan with your bank? Okay, do you need full documentation, or can you do stated income and minimal documentation? Or call me. I'll let you down. I know the standard criteria, so I can apply for, instead of one bank to do the personal loan stacking, I'll apply for 4 banks. Instead of getting $25,000, I'm gonna get you $100,000. Okay, it's gonna be 4 loans with 4 monthly payments. All right, and then I'm gonna charge you my success fee for providing that service for you on the back end, and that's what you're gonna pay me for my services. But you're not even gonna get past the gatekeeper unless you qualify. Simple as that. Anyway, I went on a little bit longer than I normally go. But listen, my name is Jeremiah Davis. I'm the funding coach. Give me a call, book an appointment. I'm still processing PPP loans, and hopefully this week I will be modifying the online application to include the EIDL loans for the second round. It is open. I'm just making sure I got a clear understanding of all the documentation that they're going to be asking for. So when we submit these loans with the documentation, we have a faster turnaround time than what we've been going through the last couple of months with all the fraud. Okay, so a lot of banks are opening back up and taking applications again. We still have virtually still about 6 weeks until the end of next month to submit for PPP. And I don't know if there is a deadline for the EIDL. And I'm hearing through the grapevine that there's going to be more funding coming down from the government, throughout the year, okay, until we get past this pandemic. So, and some of you already got your first PPP and it's over 2 months ago, you can apply for the second one now. So if you didn't apply with me, go back to the people that you applied with the first time and see if you qualify and are ready to proceed for the second round. and get that. Now, the EIDL is going to be a lot more documentation, but the reason they're doing it, excuse me, is because the first EIDL was a 6-month business operating expense. The second EIDL is 24 months of operating expense. So these loans are going to be a lot higher. It might be $150,000 depending on your business. But you do have to have, they want to see the 2019 full tax docs, 1040 Schedule C, as well as a year of bank statements. You got to provide all of 2019 bank statements, okay? As well as the other documentation, ID, check, articles, things of that nature, okay? Now, yeah, you can go directly to SBA and apply yourself, but if you're not sure, give me a call. We'll do the work for you, but we do charge a fee for our time and expertise. So just keeping it up front, above board with you guys. If you're not 100% sure, you can change your own tire too, don't you? But, why would you? I ain't changing my tire. I'm calling roadside. I'm not changing the oil either. I'm going to take it in to the dealer, saying, pay him to change it. But I understand if you don't want to pay someone, but if you do work with someone, make sure you work with somebody that's credible and know what they're doing, okay? And know how much they want to charge you up front, okay? And don't pay anybody up front, okay? That's just my 2 cents and my advice. I'm not paying nobody up front unless I know what I'm getting, because if I don't get what I pay for, we're going to have some problems. Just keeping it real, okay? There's some things you do have to pay up front for, but, in the financial industry, there's more unsavory characters out there that will charge you up front and not fulfill their obligation. So just be careful. All right. You don't have to call me. Call somebody else that's a professional in the industry, and figure out what you need. Figure out what you need to qualify for any particular loan. Equipment funding, real estate investment loans, hard money, business loans, personal loans, SBA loans. Figure out what the criteria is. Oh, also on the EIDL second round, you got to have a 620 credit score. First time you got by with a 600. They up the ante a little bit, which is not bad. 620 ain't hard to achieve, but you need to know those things before you apply. Okay, you need to know exactly what the SBA is looking for. And it's going to be like a 1%, 2% interest loan for over 30 years. So, and they're deferring the payments for a whole another year. So you're not going to even start making payments until like 2022 sometime. So if the money is there, the PPP money, all that 100% of that money is going to be forgivable. The EIDL, that's not forgivable. You're going to have to pay that money back. So before you try to jump in and get $150,000, $200,000, make sure you got your ducks in a row and that you have a plan, because you're still going to have to provide documentation of how you spent the money for your business. Okay? Most of us that are legitimate have regular monthly business expenses that can easily justify the money. So it's not difficult if you're keeping track of these things with your business bank account, and some type of bookkeeping account. I personally use QuickBooks. I pay like $35 a month. That's synced to my bank account. So every time I use one of my cards, everything's category automatically. So I can generate a P&L in 2 seconds. That's what I'm talking about. Having your stuff in order. Okay. All right, you guys. Thank you for watching. I went 40 minutes tonight, but I appreciate you guys following me. Like, subscribe. YouTube, Business Funding Now fan page. Show me some love. Share the video as well. Thank you. My name is Jeremiah Davis. I'm the Funding Coach. Peace.